Good morning, folks. You can see mortgage-backed securities. We're up just 109 basis points. How about it? Why? Inflation, real soft inflation print. Let's get into it. So CPI came out. We were looking for that month-over-month number. And on the core side, it came in at 3/10, 2/10 less than the 5 we were expecting. That 3/10, that's a 3.6% annual run rate. That's a really softer inflation number. All the numbers came in softer. Even the headline 7.7 versus 8%. The monthly month over month headline number came in at 4/10 versus 6. So the inflation number in our eyes looks like it is peaked. What that means is rates probably have peaked. At 431 on a 10-year note, we're now 391. So we're 40 basis points off, the peak of a couple of weeks ago. That's going to feel real good. You see here a monster green candle. We have the 50-day moving average in here that we got to be mindful of. But this doesn't mean it's all clear sailing, right? There's going to be a lot of volatility. We got to get through some Fed speak, some more auctions, and boy, it would be a wonderful time for a Fed official to come and acknowledge that, hey, you know what? This was a really nice reading. We probably need to do less. And that's the sense that the bond market is getting, because not only is the 2-year note rolling over, 2-year note went down to 438. It's the largest one-day decline in 22 years, right? So those are big, big moves. And those are tough moves to reverse. Like when you get a move like that, I don't know that we're going to go back up to there again. I mean, we're going to have to get a hot inflation number, that would really surprise the market to reverse that, in our opinion, because the 2-year note tries to front run what the Fed's going to do. And now the chance of a 50 basis point rate hike next month, which is that step down we've been talking about, it went from 50, basically a coin toss yesterday, to nearly 80%. So the market is immediately feeling that this is the move that's going to make the Fed do less. And then eventually we'll get to that terminal rate sooner, because inflation is slowing down, pretty rapidly by that number. It was a good number. We'll check in later today. But again, it's going to be very volatile. We shouldn't think that, oh my God, rates going to get much, much better right away. But this is a really nice change, because this is what we've been looking for a year. Like, where could inflation have peaked? This is one of those numbers. This is a really nice number. Hope this finds you well. Be back at it later, folks. Bye for now.